There's one stock that's holding up incredibly well. I'll give you the ticker right now. It's NIO electric vehicle stock. I think it's holding up better than Tesla by far. Hit that subscribe button if you want more timely stock ideas. And I'll show you right now what I'm talking about. So this is the stock chart. We can see that NIO is heading up in the last few days. And the market has been heading down. So that's called relative strength, and that means NIO is stronger than most of the market cap of the entire stock market. And if we look at Tesla, this is what we see today. Pretty heavy selling. So NIO seems like it has the eye of smart money or dumb money. It's getting bought a lot, and there's a couple reasons why. So most recent earnings we really have is back in June, and deliveries were 25,000. We do have earnings coming up in about a week and a half, so that's enough time where it's sensible to take a position in NIO, because it could move 10% in that time. It could go sideways. It's best not to hold into earnings, but what we're trying to do here, and I'll explain it super quickly with this chart as soon as I finish this NIO explanation, is this. Make 10% once and lose like 10 times in the process. So that's why there's so many ideas on this channel. So you only need one when you lose really small on the other ones to be profitable and beat the market. So let's look at basically what we're talking about in terms of fundamentals. They operate over 3,000 battery swap stations in 500 cities, and they're starting to have 50 or so stations in Europe. That's 73 million battery swaps. And to just give an example with a scale, in the beginning of May, there were over 100,000 battery swaps on one day. So I wouldn't say that this is the BYD in terms of comparing it to Tesla. BYD is the Chinese electric vehicle. NIO is really just focused more on, at least in how it's valued, it's focused on batteries. There were a couple of items to consider. So Bridgewater did sell about 2 million shares. So that filing indicates a selling that occurred earlier. So we don't know exactly when they sold, but this move is almost 50%. So even though it's gone sideways for almost a month, it earned the right to go sideways. That's what typically happens after big moves, and that's why I think people are expecting Nvidia to go sideways for quite a bit at this point. I think some of this selling occurred because there's not a high expectation for these earnings, given we just went up 120% in Nvidia. I think it's going to go sideways, and I think NIO is an example of how a stock can go sideways and still hold up strongly. As far as risk, this $5 whole number level is a pretty clear risk. You can risk 5 cents and make $1 if it goes to all-time highs, but more likely even just 50 cents would be a great 10-to-1 risk reward. In terms of volume at a price, this is kind of a shelf here, you can see, before we get to the big shelf down here from all of this volume. But even if you don't want to wait for it to chop around, this is the clear level. And it's very clear on a 5-day chart. What we're talking about is held here. This is the support. So tomorrow or the next day, when you see this, if you're risking, this would be more like 15 cents as the current price is. That would be a clear level. Today's open would be a clear level. So this is a technical idea. This is one of the strongest names in the battery lithium-ion EV space. And it's a reasonable time to buy it because there's still a couple weeks to earnings. Now, for the last few minutes of this video, this is what we're trying to do. And this is why this is a reasonable strategy to take 10 losses. Don't get too prickly about this. All this is this is 0.5%, right? This would be 50%, this would be 5%, this is 0.5%, this is 10%, and this is 10% right here. So all this is 0.5% loss on a 10% position, and that happens 10 times. So that's 10 losses of 0.5% on a 10% position. Followed by a 10% gain on a 10% position. Twice. 2 of those. That's the whole game right here. 10 losses, 2 wins. Those wins are 10%. The losses are 0.5%. And this is what the compounding calculator creates. Above market returns, 18%. And this is a lot of losses, guys. 10. This is a 20% win rate. Most good medium-term swing traders have a 30 or 40% win rate. Okay? This is about as conservative as this could possibly be as a model. So what does a 0.5% loss look like? Here are 2 examples. This trade on Tesla right here entered at 301. Okay. Exit at 298. That's $3 right here on a $300 stock. That's 1%. Okay, so that's a little more than 0.5%. But look over here. Entered at 335, exited at around 333 and change. That's about $1.50 on a 3% stock, $300 stock. So that's about exactly 0.5%. Now, what about a 10% win? Well, let's look at Nvidia. Okay. Got in at 138, risked 136 or 135, right around here. It's about $3, maybe $4, okay. 138 to 134 area. $3 times 10 is $30. Sold around 168. That's a 10%. A 1 to 10 risk reward. It's actually a 30% win, but because I risked a little more, you can think of it as a 10% win on a 1% risk, when in fact it was a 3% risk on a 30% win. that's as succinct as I can make this explanation whilst using actual trades. Easier done than said. Real trade on Nvidia, 2 real trades on Tesla, and the calculator. Compounding explained. Guys, if you want to talk about position sizing, you want to talk about more stock ideas, timely stock ideas, go to the link in the bio, selfadvisors.com. If you want to hear from a verified day trader who has made well over $5 million, it's actually $9 million, and that's verified by an independent journaling software that connects directly to his broker and is visible to the public. Check out this video. I'll log into his broker right now so you can see his reel, and then he'll talk about a $30,000 day trade. You guys are awesome, and here's Adam.
Thanks for checking out this free training. I'm here with the lead sensei of the Aikido trading method, Adam Geffert. I'm just going to log into his broker very quickly so you can see that his results are real. This is his Guardian broker. He does have more brokers than this, but you can see that he's made about $4 million net.
Yeah, Guardian's been a good broker for me. And in this quick video, I'm gonna show the viewer how to trade. Show them a little taste of the Aikido trading method, that I've. So let's start with the times to trade. The best times I think to trade are on the pre-market and after hours. The stocks move differently than market hours because there's less traders at that time, and also you can do it in those hours, and it won't disrupt a day job or it won't disrupt things that you might want to do during the day. And let's take a look at some of the trades I actually did today here. I'll share my screen. So these are some of my brokers here. They're all brokers that where you can short microcap stocks below 50 million market cap, nano cap, and microcap. And here's a trade I did today. This is KTTA. So I made about close to $30,000 on this broker with this one. And I started out in the pre-market after the news hit at around 7 a.m. I shorted it, then I covered.
And if someone's interested in learning more, how can they reach out?
They can go to AikidoTradingMethod.com and click on the free training, and there's some links on there where you can go and then you enter your name and email address, and that actually goes to this video right here. But what we'll do is we'll email you and tell you the next steps to learn more about the Aikido trading method.